So what's the one biggest thing that's affecting the stock market, real estate, and mortgage rates? The Fed, inflation. So the number that was just posted this morning was the CPI, the Consumer Price Index. It came in kind of surprising. So that's what we're going to talk about next and how that's affecting mortgage rates. But if you're new to the channel, my name is Dan Frio. This is the rate update. I do this video every morning to make sure you're informed everything real estate, especially when it comes to financing. So if you like my video, please don't forget to subscribe down below. So let's get on to the news. So what we start out with right now is the headlines. Headlines all over the place is this, and it's a little deceiving, and I'll explain why. Consumer prices rose 8.5% in March, slightly hotter than expected and the highest since 1981. Oh boy. All right, the next thing is inflation continued to worsen in March as gas and rent costs rose. Live update. Well, then we see this. Stocks rebound on hope inflation is peaking. NASDAQ adds 1%. Okay, so a lot of people will just stop at the shock and awe of, wow, inflation is really bad. Well, let's dig in a little bit more because my question is always, why? Why are stocks rising? Okay, so when we dig into this number, you're going to see this. Consumer prices for March increased 1.2% month over month and 8.5% annually, Labor Department said on Tuesday. But traders were focused on the core reading, which excludes food and energy prices. Core CPI in March increased 0.3%. That's below the consensus economist's estimate for the Dow Jones of 0.5. Core prices on an annual basis were up 6.5%. Okay, that's interesting. Let's go to the next headlines. Gas is not the entire story. Stripping out volatile fuel and food, so-called core price climbed at a brisk 6.5%. Hold on, in the year through March, up from 6.4% in the year through February. Even so, the core index offered a rare glimmer of good inflation news. It was slightly down a bit on a month-to-month basis, rising 0.3% from February to compared with a 0.5% the previous month. Given the pop in gas prices in March, these numbers are likely to represent something of a peak. Okay, wages are up sharply, pushing costs up for employers and potentially prompting them to lift prices. Businesses are feeling that they may have power to pass rising costs along to consumers and even to expand their profits because consumers have continued to spend during the full year of rapid increases. So let's break all this down. What are we seeing? Well, we're seeing the inflation front starting to subside a little bit, maybe. Okay, this is just one reading out of many, but at least it's giving some people a glimmer of hope. The stock market's going up, and as you're going to see, the MBS market is starting to rally a little bit. Thus, when that happens, mortgage rates come down. So let's see how all this is affecting mortgage rates. So let me get my head out of the way, and you see here, the MBS market right now is up 52. That is a nice number. We love when this number when you're seeing it, it's in black. When I see it, it's in green. As long as it's not red, we like the number. What does this mean? Well, this actually tells us what's going on with the price of this bond. So the MBS market is a bond that trades on Wall Street. You might even own it in your portfolio. That is the biggest component of your mortgage rate. Okay. So when the price, like in this case, when the price of the bond goes up, yields or mortgage rates come down. So we love when the price goes up. There's an inverse relationship, an opposite relationship there. Okay. So what we see here too is it's been pretty dramatic. And then we have here, it is significantly stronger for the day, the reading on the MBS market. That means when we have strength, the number goes up. Thus, as we just discussed, rates would come down. So let's see where rates are right now. Well, the MBS Mortgage News Daily has not updated rates yet because most banks haven't posted their rate sheets yet. But where we start the day out is right here. And it's basically, if you watched my report last night, it's the same numbers. But let's go through it real quick. So for those that didn't watch last night. So the market ended or closed last night, and here's where rates were. The 30-year fix came in at 5.25. It was up 0.19 on the day, just on Monday alone. Okay, guys, remember, these are not my rates. To get your customized mortgage rate on what we can do for you, I'll give you that information here in just a minute. So let's go across here. The 30-year fix now is peaked out at 5.25. It is up 0.19. from Friday's close. The 15-year fix is 4.42. It is up 0.13. Guys, this is a one-day move. Rates went up 0.13. The 30-year FHA/VA, this is the government section, is coming in at 4.82. It is up over an eighth at up 0.14. The 30-year jumbo is coming in at 4.4, up 5 basis points. And the 5/1 ARM is coming in at 4.08, only up 0.03. Okay, so there's a huge spread between adjustable rates and fixed rates right now. And if you want to learn more about that, check out my channel or give us a call. When we go down through here, what's the trend for the day? It is significantly stronger, but I don't like this this chart over here because you can see we peaked over that 5% line for the first time in a long time. All right, so that's where we are today with mortgage rates. So if you want to find out what we can do for you, your customized rate, it's easy to get a hold of us. So you can do this. Give us a call, 844-775-5626. You can apply online. You can schedule an appointment, and you can even chat with us now on our new chat bot. So I hope you find this informative. If you do, please give me a thumbs up, subscribe down below. My name is Dan Frio. I do the rate update every day. If you want your customized mortgage rate on what we could do for you, or at least review what offer you have on the table right now, please let us know. We'd love to do that for you. God bless, guys. Thank you so much for watching. I'll see you later this afternoon.